Effective October 1st, 2013, premium increases will affect some policyholders that receive subsidized rates. Now, before we discuss how and when premiums are changing, let's first define what we mean when we talk about subsidized rating. Now, we'll also explain what we mean by rates that reflect the full flood risk. Now, subsidized rates do not represent the building's true flood risk and are determined with limited underwriting information. Now, they are discounted rates that have typically applied to structures built before a community adopted its first flood insurance rate map and the guidelines that go along with that adoption. Now, these types of rates have typically been applied to pre-firm buildings. Now, full risk rates, on the other hand, do reflect a building's true flood risk. Now, it means that the premium reflects the risk assumed by the program and all administrative expenses. Now, it takes into account the full range of possible flood losses, including that rare but catastrophic flood as well. Now, if you remember, back in January 1st, 2013, premium rates for subsidized non-primary residences began increasing. Now, rates began increasing 25% per year upon renewal until they reflect the full risk rate. Now, there will be more categories added for premium increases effective on October 1st, 2013. Now, FEMA will begin premium rate increases for additional categories of subsidized properties, including business properties, severe repetitive loss properties, and any property that has incurred flood-related damages where claim payments exceed the fair market value of the property. Now, rates for these additional categories of properties will phase in at a rate of 25% per year upon renewal until they reflect full risk rates. Now, let's take a moment and comment on the use of the term business property, since we usually refer to buildings as either residential or non-residential. Now, for the purpose of completing an application, a business property is any non-residential building that produces income or a building designed for use as office or retail space or for wholesale, hospitality, or similar uses. Now, buildings that are permitted for residential use, such as apartments, rental dwelling units, or buildings such as churches, are not considered business properties for the purpose of completing the application. Now, it will be necessary to capture information on business properties on the application so that they can be properly segmented for reporting purposes. Now, until such time, all non-residential buildings will see a 25% increase upon renewal beginning October 1st. Also effective October 1st, 2013, FEMA will begin to apply full risk rates to any property not insured by the NFIP as of the Biggert-Waters date of enactment in July of 2012, and on any property purchased on or after that date. Now, full risk rates will also be charged on any policy under the NFIP that has lapsed in coverage as a result of the deliberate choice of the policyholder. Now, again, subsidized properties in these classes will go directly to full risk rating either as new business or at their next renewal following October 1st, 2013. Now, obviously, for those of you that are actively writing flood insurance, you may have policyholders that do not fall into any of the categories that we just discussed. For example, what about policyholders who own a subsidized pre-firm building as their primary residence? Well, they can keep their subsidized rates until they do one of the following. Until they sell their property. If they sell it, it goes to full risk rating when the new owner purchases a policy. Until they allow their policy to lapse. If the insured deliberately allows it to lapse, when it's rewritten, it will go to full risk rating. Until they suffer severe repeated flood losses. Once again, it will go to full risk rating. And finally, if they choose to purchase a new policy, it will be at full risk rates. But remember, If they don't take any of these actions, they get to keep their subsidized rates.